All right, Ed, top of your note today to our producers, we have several concerns about 2026, which is interesting because I didn't hear from a single person who was on this program yet today, or for that matter, anybody who was on halftime earlier who has several concerns about 2026. What gives?
So, first of all, I want to emphasize that these are concerns that may or may not come to fruition, but we got to look ahead and see what might happen. Top of the list is what could go on with the Fed. Usually the market struggles in the first 6 months of the new Fed chair, average correction of about 15% during the first 6 months because the uncertainty around what that new Fed chair could mean. And we have a ready-made concern with Fed independence, and you certainly have seen it the last few days with we don't even know who the Fed chair is going to be in the back and forth horse race. And so you could see widening credit spreads. You could see higher inflation expectations as a result. And at about the same time, you could see the little sugar rush from the one big beautiful bill through better tax refunds in Q1 wear off in Q2. And you throw on that with a really strong earnings growth this year, may not be quite as strong next year. And it's just a little bit more of a difficult backdrop. So you wonder if you can have a repeat. You've had 3 great years for the market. Can we get a fourth if that backdrop isn't nearly as strong as what it has been?
I feel like people are looking for the exact opposite, like a pretty strong backdrop. That I hear you on the uncertainty about who the next Fed chair is going to be, but you're still going to get at least one cut. That's positive. You're going to be cutting into a strengthening economy. That's 2. The let it run hot, fine. Earnings are only telling a story that could get better, not worse.
Well, if you look at consensus estimates, I'll start with what you said last first. Consensus estimates are calling for around 16% earnings growth for next year on average. Analysts are about 8 percentage points too high, so that puts you around 8%. And that's running around 13% so far this year. So that would mean an earnings slowdown. And my concern about the Fed isn't necessarily that they're going to turn extremely hawkish and restrictive. My concern is that the market may interpret the Fed as being too dovish. And while amazingly you've seen inflation expectations contained throughout the last 5 years of super high inflation and staying above the Fed's target, if people are concerned about an Arthur Burns type of Fed, that may not be how the market interprets that. Now, again, I want to emphasize this isn't where we are right now. We'll still overweight stocks, but these are some concerns we have about next year, how this could come to fruition. The fact that that is not on a lot of people's radars leads me to believe that maybe we're on the right track to be concerned about it.